Okay, a new twist on the 416 condo catastrophe. What if it turns out you can't get any mortgage at all on your condo? Not the existing ones. I'm talking about the ones that are coming up for refinance, coming up for renewal. You need to refinance, or something that's happening, a mortgage event that's happening right now on your 416 condo, principally the dog crate condos, okay? Or on your purchase of the, so your construction's finally finished after 5 years, and now it's time for you to get the mortgage, and you got the bad news about the low appraisal, but you scratch together the money to be able to get the difference, and you start going out to get a mortgage, and you find out, nope, nobody wants to give you a mortgage. Now, I'm exaggerating a bit, because banks give mortgages based on you, not the building. Sometimes they bring the building in a bit, but it's not a consistent approach. Banks are covenant lenders. They look at the property, but they also look at you as the payer. All the things to do with your income, your debts, your assets, they'll look at all those things. And they are more likely to approve. And by the way, they're very, very likely to approve a mortgage for an individual in a building where they have the construction loan. Yeah, if it's one of those buildings that's finishing, we've heard about the blanket appraisals, but if it's one of those buildings that's finishing, and you're one of the banks that is involved in the syndicate of building this 300-unit tower, you're probably going to get a mortgage for one of them. You got to be qualified. You got to have the right credit, right income. You got all that, and you're probably going to be fine. But if you're not, and you have to look at any kind of alternative lending or lending that's outside of those banks that have a construction interest in the property, you may find it's pretty hard to get a mortgage, because this, by the way, this was a great story from Rob McClister. Everybody who's involved in the mortgage business, you should subscribe to Rob's daily digital newsletter, Mortgage Logic. Rob McClister, Mortgage Logic. That's a great, great newsletter. Everybody should be involved, who in the industry should be involved. Look at that. He came up with this idea. I read it. I made some calls. And yeah, there are alternative lenders and private lenders and some institutional lenders who offer in the alternative space that are saying, yeah, no, we don't want to do any of these condos. And why? Why would that be? Because those lenders are not really covenant lenders. They are. They look at the covenants. They want to understand that people can make their payments. But they're more property lenders. They're more equity lenders. And well, you might say, well, wait a second, Ron. If the appraisals, if the guy bought it for $900 and the appraisal says it's worth $700, why wouldn't they give him 80% of the $700? I mean, that's the value, right? But wait, what if it's not really the value? What if there's a situation where in some buildings, the price of dog crate condos is falling so fast that you're not sure the appraisal comps are right? I'll give you an example. I read another post. A condo sold for $555,000, almost sold. They're just putting the pen to paper. They've got an agreement. There's going to be an offer, sign back. Everybody's in agreement. Not quite ink yet, but it's DocuSign really. But anyway, suddenly, the night before, there's a unit sold on the same damn floor for $505,000. This guy's $555,000. By the way, he's not making any money. He's not even breaking even. It's a bad deal for the seller. But he got undercut by $50,000. Just like, that's big money. That's like 10% in one night. Because once that sale goes through, that's the new comp in the building for that floor. It's the same size unit, or maybe it's like 25 square feet difference. Who gives a shit, okay? So, yeah, kills the deal. That sets a new comp for the floor, the building, the whole, it's a disaster, because that can happen. Because when people have to sell in the building, they have no choice. They must sell. There's just enough room on the mortgage to let them do it, or they're willing to throw in $50,000 of losses, dead financial losses to get the unit sold. Who knows what the price will be? So if you're an alternative lender, you're more of an equity-based lender. You might be institutional, but you might be saying, wow, because you get exposure to these things. You find out, you do the research, because you got lots of people paid to do the research and get an understanding of this. And not only that, but you get victimized by a sudden drop in price. If you did a mortgage in April and now all of a sudden the place is worth 15% less, that's a problem. So you say, well, Ron, why can't you just go to say, okay, we're going to lend at 50%. Yeah, you get us an appraisal that we accept. We'll lend at 50% of the value. We feel we're safe. What if you're not safe? But more importantly, what if you're worried that it will take too long to sell? Because that's a big, big part of being an alternative lender. Is this a property that if I had to take it back from the owner, if I had to go through a power sale process, take over the property and sell it ourselves as an institution, or as a MIC or as a private lender, if I had to take it over and sell it, how long would it take to sell? Because I don't want one that's going to take a year to sell. If you want to know why cottage country is so damn slow, that's the reason. Nobody wants to get involved in something that they don't know when it's going to sell, because it's so slow. So if you're in this condo situation where you're looking at, even thinking about lending at a low loan to value, you think to yourself, my God, the listings are so wild in 416. How long is it going to take to sell the thing if I have to take it back from the borrower? So if you're that financial company, if you're that lending company, if you're that mortgage company, would you say, you know what? There's other mortgages to do. There's other mortgages to do in other provinces. There's other types of mortgages to do. Let's do some townhouses. Let's do some semis. Let's do some single family. Why don't we just temporarily pass on these dog crate 416 condos? We just won't lend on them. And then we don't have any worries. We don't have any concerns. Yeah, that's the option. And some are taking that option. No lending at all on this type of inventory. Just not going to lend on it. What's that mean? It means you can still get a mortgage from a bank. Yes, you will. That has not stopped. That is still there. If you qualify, if you're that highly qualified person, that solid borrower, you can still get a mortgage from a bank. But if you're just not quite, and a lot of these people who are on their second and third condo and things aren't working out, they are not the bank's borrower. I assure you, we see those every day. Then you can't get a mortgage. So that's a complete lack of liquidity for certain buyers. Liquidity is the ability to borrow money, the ability to access money, the ability to get money somewhere that you don't have it today. That's liquidity. And it's vanished for some of these units and some of these buyers. That's a big deal.